Dear students, we are explaining module 8 or we are learning module 8. There I explained single column cash book, double column cash book and triple column cash book. Now one cash book is left, that is the petty cash book. Now what do you mean by petty cash book? Just like you get pocket money from your parents. A chief cashier, he will not handle the day-to-day cash transactions, small amounts. That means entertaining somebody, some guests in the organization with tea, coffee, refreshments, lunch, paying for auto charge, paying for stationery. So what the arrangement is, petty cashier will get certain amount from the cashier. So that petty cash book we are maintaining separately, and that is what we are going to learn in this module. So first, if you see that petty cashier is there in the organization. Large organizations, if you want to enter all the cash transactions, see, we have seen that 3 types of cash book already: single, double and triple column cash book. So again, if the petty expenses, the small expenses which the organization will incur on a day-to-day basis, that also if you have to enter in the cash book, it will become too complicated. Too many transactions will be there. So that is why we are keeping the petty cash book a separate ledger, and petty cashier will be there in charge of petty expenses. So the system of maintaining petty cash book is known as imprest money or float. So what is imprest money? I told you, just like you are getting pocket money from your parents, 1000 rupees or 2000 rupees. They know that what are your requirements. Based on that, they have a calculation. That money you will get. So if it's for 1 month, next month again the parents will give you. Same procedure we are following for the petty cashier. Chief cashier, based on the calculation over the years, they have a calculation how much money has to give to the cashier. Maybe it's for a week or 15 days or 1 month. They will calculate that amount and they will give it to the petty cashier. So if they are giving for 1 month, after 1 month they will balance that account and they will see that how much balance is there. So if 1000 rupees is the petty cash given to a petty cashier for 1 month, 400 is the balance. That meaning next month he will get 600 rupees from the chief cashier. So the balance 1000 rupees will be the opening balance always. So that system is known as the imprest money or float. So imprest, the meaning of imprest is paying in advance. Now system of recording and maintaining entries in the petty cash book is known as Imprest system of petty cash book. These are important when you go for an interview also, you have to remember that. Now what are the advantages of maintaining petty cash book? So first thing is, chief cashier need not bother about the small payments in the organization. That will be taken care of by the petty cashier. Now the main cash book is not overburdened with so many entries. So the day-to-day transactions, petty expenses we are recording separately. And frequent check. The chief cashier, if any time if we want to check the cash balance with the petty cashier, it is possible. And frauds can be reduced because whoever handling money, there are chances that they will misappropriate the payments. They will misappropriate cash. See, if he is in need of some money, he will think that he will take some money from the petty cash and then he will make some false vouchers and all. So this we can reduce to a great extent with proper control. The chief cashier can give that without any notice. He will come and check the cash balance. Now every payment exceeding rupees 2, that should be supported with a voucher. So that is the rule as per the audit. So petty cashier will be asked to maintain voucher for all that. Even if he is paying for an auto charge, then he has to make a voucher and he has to get the signature, then he has to make the payment. Now a person without accounting knowledge also can maintain the petty cash book. That is another advantage. Now there are 2 types of petty cash book. One is simple petty cash book and second one is analytical petty cash book. So both we are doing one problem to explain the concept. Then I am giving different problems for your practice. In the description box you have to do the problems. So now format of the petty cash book I have given. It's totally different from the other 3 cash books. One is amount received, that will be the first column. Second is the date, then particulars, then voucher number, ledger folio column and amount paid. So this will be the format. When we will do the problems, it will be more clear. Now first problem we are going to do. On November 1st, 2020, a check for rupees 1000 is made to the petty cashier to pay for the petty cash expenses for the month. So 1000 is the petty cash, the system maintained by the chief cashier. Petty cashier will get 1000. They will see that 1000 rupees balance is there to start with every month, first day of the every month. So the petty cash expenses were as follows. 2020 November 1st, purchase postal stamps rupees 100. November 3rd, paid auto charges rupees 75. November 4th, paid for bus fare rupees 24. November 5th, bought notebooks rupees 25. November 5th, bought stationery rupees 50. November 6th, paid for Xerox rupees 75. Now November 9th, paid for mobile phone recharge rupees 40. November 14th, bought envelopes rupees 20. November 20th, paid for phone call rupees 40. November 24th, paid for postage rupees 30. November 26th, bought stationery rupees 26. November 30th, paid for auto charge rupees 45. You are required to prepare a simple cash book without analysis columns for the month. So when you learn the second type of petty cash book, analysis column is there. So with the drawbacks of the simple petty cash book, we are bringing the second method where it is analytical in nature. There errors and frauds are easy. To detect errors and frauds is much easy, and which expense is going on a higher side and where you have to concentrate on reducing the expenses and all, we can control through the analytical petty cash book. Whereas this problem we are doing the simple petty cash book. So you have to remember that the cash balance, the amount, they are starting with 1000 rupees. Now that is received from the bank. So the first entry is to bank account 1000 rupees. Now November 1st, postal stamp. Here we are not dividing the expenses. All the expenses we are showing. So first entry is they have received from bank. So we are writing to bank account 1000 rupees. Now what all expenses they have incurred. By postal stamps, amount paid column 100 rupees you will write. By auto fare 75. By bus fare 24. By notebooks 25. By stationery 50. By Xerox charges 75. By mobile phone recharge 40. By stationery 50, by mobile recharge again 40, by stationery 20, by phone charges 40, by stationery 26, by postage 30, by auto charge 45. Now these are the expenses. Now what you have to do, 1000 is the total column. So both sides we are writing 1000 and the amount column 1000 we will write and the balancing figure we will take. Total of all expenses minus the balance available is 400. So to balance brought down, we will write in the amount column 400. So the rule for Imprest system is every month beginning the cash balance should be, petty cash balance should be 1000. So the chief cashier, now he will give 600 rupees to the petty cashier. Imagine if the balance was 500 rupees, chief cashier will give only 500 rupees. So the idea is to make the same balance 1000 rupees in the beginning of every month. So this is very important. Now with this drawback, we cannot, there are certain limitations of simple petty cash book. That is not able to make an analysis of petty cash expenses. What all, conveyance how much, stationery how much. Everything we are showing it as one expense only. We are not segregating the items. So there we are not able to make proper control. So expenses are not analyzed periodically every week where expenses are going up, every month which expenses are going up. It's not able to make out. No, we can make more errors and frauds due to lack of documents. See, if you're going for an auto man will not give you a voucher. They will show sometimes if it's Uber or Ola, they will show it in the phone, this much I paid. So the petty cashier will make a voucher. He can make wrong vouchers also. He can increase the amount, he can decrease the amount. Decreasing the amount will not happen if they will increase the amount. It's all possible. Then more chances of misappropriation. Then amount may be used for unauthorized expenses. See, some cases, petty shop and all, if you go sometimes, they may not give the bill for stationery, refreshments and all. So they will make their own bill and that is possible to cheat. Now, so we are coming to the second one, that is the analytical petty cash book. Here you can see that all the expenses will be clubbed into different headings. So stationery, one separate column will be there, conveyance will be there, sundry expenses will be there, like that. Everything we are segregating into different headings. So it will be more clear. So analytical cash book, first point you have to remember, this petty cash book is designed to remove the disadvantages of simple petty cash book. Simple cash book, I told you, we are not segregating the items. Everything we are showing as an expense. So proper control is not possible. So this method will introduce they will remove the limitations of the simple petty cash book. Now total expense column is there plus individual items are also there. Xerox will be there, stationery will be there, everything. When you will see the format, you can see that. Now expenses are entered in the total column as well as in the individual expenses column. Now individual expense column total should be equal to the total expense column. Now you have to remember, verification of accounts is possible by cross-checking total column and the individual expenses total. We can cross-check that total. Then individual expenses can be controlled. If one side, if you see that one expense is going up every month, conveyance is going up or refreshments is going up, they can ask the petty cashier for explanation. Now various control measures can be imposed. See, if cross checking is possible, auto charge if he is creative more and vouchers are not supported, then we can question the petty cashier and we can control that. So the fear will be there with the petty cashier, because chief cashier will come and check any time. So he will be very much bothered about, and he will be making the accounts properly and he will be controlling also properly. Now economical method. Even a person without accounting knowledge, they can do the petty cash book, and it's very economical also. There is not much expenses involved in that. So the format of the petty cash book, if you see, receipt number will be there, date will be there, voucher number will be there, particulars will be there, total column, ledger folio. Now various expenses we are giving. So I told you total column will be there, and major expenses we are giving separate columns for that. Conveyance, stationery, postage and telegrams, personal ledger and sundries. Based on the institution, what all expenses they are incurring, they are keeping the separate individual columns for that. So that is for their control purpose. So they know that which item they are incurring more expenses, that they will keep the separate columns for that. Now the last problem is prepare an analytical petty cash book as per the Imprest system using following information. To 2020 November 1st, received rupees 2,500 for petty cash. November 2nd, so that is the opening balance. First problem what we did was 1,000 was the Imprest cash. Here it is 2,500 is the Imprest cash. Paid auto charges rupees 25. Paid for carriage rupees 75. Paid for postage rupees 75 on November 3rd. November 4th, paid to casual laborers rupees 330. Paid for stationery rupees 170. Paid for net charges rupees 90. November 5th, paid for service charges to the office computer 325. Next is November 6th, paid for bus fare rupees 30. Paid for Xerox charges rupees 120. November 7th, paid for envelope rupees 135. Paid for refreshments 175. Paid for carbon papers rupees 30. Paid for stapler pin rupees 20. Paid for paper rupees 200. Paid for account books rupees 500. Now when you will write this, the initial opening balance is 2,500, that is the Imprest money to cash. They will receive from cash or bank. So the previous problem was from bank, so we wrote to bank. Here it is cash payment. So to cash account 2,500, we will write in the receipt column. Now date will be there and voucher numbers will be there. When you are doing the problems, we are not doing that. So by auto charges, we will write in the total column and conveyance column. By carriage 75, total column and conveyance column. By postage 75 rupees in the total column and postage 75 in the individual column. By wages 330 in the total column and wages 330. By stationery 170 in the total column and stationery column also 170. By email 90 rupees. There is no separate column for that, so we are writing in the sundry expenses column. By service charges 325. So in the sundry column we are writing 325. By bus fare 30. Conveyance column also we are writing 30. By Xerox charges, total column you are writing 120 and in the sundry column also we are writing 120. By envelopes 135 in the total column and the stationery column. By refreshments 175 in the total column and sundry expenses column. By carbon paper 30 rupees in the total column and stationery column 30 rupees. By stapler pin 20 rupees in the total column, stationery column 20. By paper 200 rupees in the total column, stationery also 200 rupees. By account book 500 and account books individual column 500. So the total you have to take for all the columns. Conveyance 130, stationery 555, postage 75, wages 330, accountancy book 500 and sundries 710. So the total is 2030. 2,300 is the total. So the balance, opening balance was 2,500. So the balancing figure will be 200. Now you have to remember, so in the balance column you will write 2,500 is the total. Now what we will do, 2,500 is the total, balance is 200 and the remaining money the chief cashier will give him 2,300 for the next month. First of next month he will get 2,300. So 200 was the balance with the petty cashier. Now Again 2300 chief cashier will give. So the petty cash balance for the opening month of the 1st of November will be 2500. So that is how they will maintain the petty cash balance. Always it will be the same. And that organization will decide based on their experience how much they have to take the cash. Now the last slide is limitations of petty cash book. That is, it's vulnerable to accounting errors. See, there are some of the vouchers, it's not issued by the organization. The petty cashier is making that. So it's possible to make the they can make errors and frauds possible. Petty cash is exposed to theft by the employees. They will try to cheat. They will have refreshments. They will make they will have lunch. They will make tea and coffee. They will make voucher and they will claim from the organization. Misappropriation by employees using false vouchers, it's quite possible. So that also they will make false vouchers. And overspending by employees. Whatever they are not spending also they will show. So misappropriation is quite possible in the case of petty cash book if there is no proper control by the organization or chief accountant or chief cashier. So this is what I want to explain with the cash book. So we have learned single, double, triple and petty cash book with problems. So every module I am going to give different problems for working out and practice. In description box you have to do that, and that is how you will get the practice. So that's very important. Next module I will come with the bank reconciliation statement. So this is very important. Give me a valuable feedback, suggestions, subscribe to my channel, and happy learning with Dr. Alice Mani. Thank you.